Good afternoon. This is Brian Shannon from AlphaTrends.net. Today's Tuesday, the 17th of June, 2008, and the S&P 500 lost about 2/3% today with its 81-cent loss in the spiders. You can see a big red candle here after coming up to the prior level of support. So it's been testing that 137 level the last couple days and finding supply in that area as we thought it might. You never know exactly uh, where resistance will be found, but most often it's found at a prior level of important support that had been broken, like we've seen here. And now in the daily time frame, we see that we've got a declining 10-day moving average below a declining 20-day moving average, which is below a declining 50-day moving average, and that's all below a declining 200-day moving average. That means there's sellers in this market. There's no other way to look at it than that. The sellers are clearly in control of this market. We still see this pattern of lower highs and lower lows. Here's the what's looking like for now, going to be the most recent lower high, and it'll take a move below about 133.5 to make another lower low to continue this downtrend. And once the path of least resistance is lower and that trend is in motion, it's more likely to continue than it is to reverse. It takes a lot less energy to sustain a trend than it does to reverse one. When we look at the 10-minute time frame, we saw here that the market was jump back above that 5-day moving average, established a short-term uptrend, higher highs and higher lows. And yesterday I was saying that it looked like, maybe we were getting towards the end of that. It's time to be on high alert for a reversal. This rally has been occurring each day on diminishing volume, below a declining 50-day moving average, and in the context of a much bigger mess here on the weekly time frame. It still wouldn't be unusual at some point to see a test of the 127 lows. So don't think that this is just going to be a short-term downtrend. There's a possibility, the real possibility, that we not only test these lows but continue lower. The financials today, if you look in there, the little rally that occurred for, we had 3 green candles in there, that reversed completely, bearish outside day, meaning it opened near the high end of the day and took out yesterday's high, and then closed right near the lows and also below yesterday's lows. So today's trading in the financials occurred entirely outside of yesterday's range, meaning that it engulfed that candle, and that's typically viewed as a negative. Back to the S&P 500, though, we're at 135.50, and of course the 137 level, 137, 137.5 had been the prior level of important support. We're looking at a hourly time frame here now, and this support broken did act as resistance, just as we saw here on the weekly time frame. And that's the beauty of technical analysis. It has those fractal properties where once you learn it on one time frame, it's applicable to any other time frame, and it's up to you to decide which time frame makes the most sense based on what you're looking to get out of the market, how much patience you have, how much time you have to commit to the markets, and that sort of thing. All subjects of a fine book that I'm aware of that I won't mention again because you guys know it by now, and hopefully most of you have received that book as well. The S&P 500, though, again, the recent lows down here near 133.5 look to be looming here. Going back to the 10-minute time frame, you see that we do have this pattern now of lower highs and lower lows. It would take a move now short-term above 136.5 to change it a little more neutral, but then of course we've got that 137 area that looks to be bigger, and I've been pointing it out on my blog intraday as well, that this 137 level once again was a place where we found sellers, as was the 49 level in the Qs, and we'll take a look there shortly. But we're back below the 5-day moving average. We've got lower highs and lower lows on a 10-minute time frame. We've got lower highs and lower lows on these 20-minute, 120-minute, the daily. So we've got trend confirmation across multiple time frames. The clear message here is that the sellers are in control. The path of least resistance is lower, and it looks like we ought to be heading down towards this level. When we get there is anyone's guess, but that's what it looks like where this market is headed right now. The Russell 2000 was off only 16 cents, and you can see here, let's look at the daily time frame first. It got up to the declining 200-day moving average. It's done so the last few days on diminishing volume. And this is that much bigger area where bigger battlefield basically, where we're seeing a struggle for the buyers may be trying to get back in control of this longer-term trend. Right now, it's not looking too good in here, but we can't say that all hope is gone at this point. Realistically, the real damage is done to this market below $72 a share. If this market continues lower, then we're going to see this right here would be a lower high right now, and breaking below the 72, 71, and 71.75 actually, below 71.75 would confirm a downtrend, and that's pretty much a very important line in the sand right here. We do have a advancing 5-day moving average, and 73 has been a very important level. So let's see what happens if we get a test of the $73 level in the next couple days. But right now, it's not looking as dire in the Russell 2000 as it is in the S&P 500. So this, though, the S&P 500, if it starts really breaking down, then it could lead to further weakness here. You saw that, the Russell closed right on its lows today. It opened on a gap higher, made a lower high, and right here at the end of the day, looking like the sellers are about to gain control of the short-term trend. So continue to be careful in there. And, like I said yesterday, we want to be on high alert. You continue to want to be on a high alert in here because this is a critical juncture for this market, especially, again, in that S&P 500 where it looks like the next shoe is ready to drop. The NASDAQ, though, was down 26 cents or about 0.5%. It came up to the level where, last week when it was toying with this rising 50-day moving averages, it looked like the rally had an opportunity maybe to get up towards that conjunction of the 10 and 20-day moving average. You see that it was rejected at the 20-day moving average and closed below the 10 once again here today. This 50-day moving average is still advancing, so it's not quite as bearish, and it did leap back above this $48 level after spending a couple days below it and below the rising 50-day moving average. But with the moving averages crossing here, the 10 and 20 that is, it indicates there's indecision. Indecision typically occurs at turning points when there's a larger battle being fought. It's that transitional period where the buyers and sellers fight for control, and with a larger weekly time frame looking kind of ominous here. You're just gonna kind of want to continue to take it slow and be very careful in here. We've got for the important level of support at 47.75 is what I'd said yesterday. Breaking below 47.75 and holding below there, then I think you're going to see that the people who bought here over the last 3 days are going to be spitting their stocks out. That's going to lead to a larger break. That 50-day moving average will have been flattened out by then. And then we could see this market down near 45 or so. So there's still a lot of potential danger in this market. The financials, again, these guys are heading lower once again. So a lot of reasons to continue to be very cautious here.